All right. Hey, everyone, welcome. Today's Monday, and let's get right into this. So what we're going to do here is we're going to trade the NASDAQ futures using the Trade Scanner Pro to see if we could find any trade opportunities on these smaller time frames like the 1 minute or the 30-second chart, and see if I can grow this account. It's a Apex account that I'm using here with TraderVate, and I'm basically at break even. I'm trying to reach the $3,000 goal, and I'm trying to do it in a sustainable way. It's not easy to do. Clearly, I've been at this now, basically going into my second month, and I've been minus some money. I was up some money. I gave it back, and I'm still trying to go. Now, there are faster ways to do this. It's just a matter of size and having a strategy that is specifically for uh, beating evals. But if you don't have a sustainable strategy, then you're wasting your time beating an eval because you have to pay a setup fee anyway. And these prop firms, by the way, I don't know, there's something going on because they a lot of these prop firms are changing their rules, and also I noticed that they're not taking affiliates. They're expecting some kind of regulatory period coming. I don't know, but my suspicion is they're losing money, or maybe what's happening are traders. There are too many really smart traders out there that are using algos to pull money out of these prop firms, and the prop firms are losing. I suspect that of course, they're not going to tell us what's really going on, but I don't know. Something strange is going on with them. Anyway, but as long as they're available, but try to take advantage because it's a in terms of risk, using a prop firm makes sense, but there are a lot of drawbacks to using a prop firm too. I think prop firms are good for a beginner, especially someone who wants to test a strategy with size, because you don't have to put real money at risk. That's the key thing, because you can easily blow $2,500 in these accounts easily, right? In minutes. So it's better to do that and actually in reality lose, $30 than actually losing 2,500. So I think it's a great way for a beginner to build confidence and build confidence in their system and their strategy. Another interesting thing I learned, I'm going to switch these charts over here in a minute. Another interesting thing I learned is that algo traders have the same problem that a non-algo trader has, and that is the strategy that they deploy eventually becomes obsolete. There's no way around that. It will become obsolete because the market changes, right? Whatever's driving the market, whatever catalysts are driving the market at the moment when that system produces alpha, it eventually dries up. Now, so with the algo trader, their typical routine is they come up with an idea, they test their idea, they back test their idea. The back test that looks promising, they basically implement that and put it into production until it stops working. And then they have to take it out and they have to replace it with another one. So an algo trader constantly has to be testing new ideas or adjusting ideas because the market changes. The non-algo trader has to do the same thing, right? That's always been the problem. One of the biggest, I think, problems that people don't realize is that this is a constant adjustment process. So if you're not able to adjust, this game just isn't for you, and it's not for most people. So before I switch this over, let's talk about my Bitcoin analysis real quick. By the way, I'll be doing this again at 3 p.m. Eastern time when we do the analysis stream. I talked about this potential breakout in my article yesterday. The title of my article on TradingView was Bitcoin breakout or fake out is still a buy, right? So whether it broke out or no, breakout or pullback or whatever, or I think it's a breakout and fake out. Basically, what I described in that article, two scenarios. One was this scenario where it just breaks and keeps going. The other scenario was this pullback scenario, which was I classified as the higher probability as far as trade outcome, meaning if the market delivered the pullback to 104, which it could still do, by the way, that's a better trade to take because there's a better chance that it bounces off of the 104 uh, and gives you a higher probability of this outcome here. Now, I left the old, this was the illustration I put on my chart. Oh, I'm in front of it. This was the illustration that I put on my chart a week ago, right? This illustration right here. See that? I left it on the chart because, I mean, the market performed almost exactly, right? Where basically from this candle right here, I was anticipating the pullback. We got the pullback. I was anticipating the pullback into this 102 area before the bounce. The market like followed it almost exactly. Not exactly, but almost. Now, again, that could be coincidence, but I seem to get these right often, pretty often, right? So my point is pay attention to my analysis, even though no one does. I know Hussein does. Hey, Hussein, it's good to see you. But yeah, I don't know. I don't know. I gotta make some changes because this is a really this whole thing. YouTube doesn't promote my streams. I have to do uploads. I can't do all these streams and uploads. Like it's just too over. It's just too much for me. I can't do it all. So I have to pick some. I have to make some changes. That's all I can tell you. Right. The Trade Scanner Pro software. Another thing I learned. Let me switch this over to the MNQ while I'm talking. I went to that conference on Friday. Okay, it was okay, but it wasn't worth the money that I paid. Number one. Number two, I was not welcome there. Everyone there was like a PhD, like in physics or whatever, and I'm not one of those type of people. So so basically, this is how it was. They ask you, oh, so what do you do? I'm a trader. Oh, who do you trade for? Myself. As soon as I say that, myself, they're like, oh, nice to meet you. And then that was it. They'd move on to someone else. Like, damn, I was really not welcome in that place. So everyone there had like a startup. So all the startup people wanted to meet like a VC guy because they were all looking for money. I mean, that was pretty much, and the presentations were very hard to sit through because the people that were presenting, while they were very smart and accomplished people, English was a second language. Now, look, I understand that it takes a lot of courage to go up there and do a presentation when you're not speaking in your primary language. But man, it was hard to sit through. And this was the entire day of watching these things. So, and I don't know. I mean, I really have the only thing I really took away from it was that the top companies like Google and Amazon and they're investing billions of dollars in AI, and pretty much unless you're like an engineer or something there or you're selling shovels, I really don't know where the opportunity is in AI. Like so, and this conference is about AI and financial applications. So if you're not like a physicist developing some kind of AI thing, an AI agent of some kind, there's really nothing for you in this, besides being a consumer of it. I don't know. So one thing I learned from one of the guys there was about his software was he was telling me that there's no learning curve. Like they say when you're presenting to a VC, they don't want to hear about a learning curve. There can't be a learning curve. It has to be intuitive. So I was like, oh, that's not good because that's one of the reasons why people don't stay with my Trade Scanner Pro. It's not my Trade Scanner Pro is not intuitive. So I'm definitely on the wrong page in that area. So I need to either make it more intuitive or come up with something that is more intuitive, meaning that there can't be a learning curve. It has to be what you see is what you get. That there has to be that today. That's the way it has to be. If you want traction. So basically, I learned I'm doing a bunch of things wrong. So that was my conclusion from that all day conference. That conference could have been condensed into 2 hours. So, all right, enough talk. Let's talk about trade ideas, right? Because that's what we're here to do. Today, by the way, I may look at Bitcoin today. I may not look at the Nasdaq because the Nasdaq, it's been, as we know, it's been harder because the ranges have shrunken. They've gotten smaller. It used to like Bitcoin could move 200 points in like a couple of minutes. Now Bitcoin takes, an hour to move 100 points, right? So that's a change. That's certainly a change. Let's move. So we're going to have our daily time frame over here. We had non-farm payrolls on Friday, which obviously was a good day for the market. Let's move this over to the 1 minute over here. And we're going to take a look at this. If I don't like the way this is looking, we'll take a look at Bitcoin, because maybe I'll try the Bitcoin futures today. Maybe they're better. We'll see, because they certainly, the trend is clearer. All right, so let's start with the daily time frame, right? So I'm going to show you the steps that I like to take. It's very simple, although it should be intuitive. I'm only looking on a daily time frame. I just want to know yesterday's low. I want to know today's overnight low. I want the overnight high, and I want yesterday's high. That's all I want from the daily time frame. I don't want anything else. I go to the hourly chart. From the hourly chart, I'm looking for trend, basically, price structure, right? So that translates into higher lows, higher highs, etc. So I see here we had this bounce off of this area here. That's generally, this is a higher low over here. This is a higher low. This is a higher high relative to this high over here. This is a higher low over here overnight. And we don't have a higher high, but I see another higher low developing here, possibly on the opening candle, right? So that looks like strength to me in general. We don't have higher highs relative to this high, but we do have an environment of higher lows. So I'm going to take that as a long bias. Now, if the market has a long bias, that means I should be very interested in buying near support levels like this one. And I should also be anticipating break of resistance levels like this one. Right? Now, does the market do those things? I don't know, but I should be leaning on that idea. All right, so that's the hourly chart. Let's change this to a 30-second chart now, because the 30-second chart and the hourly is where I'm taking my trades. So the question here is, does the Trade Scanner Pro align with my long bias idea? Not on the 30-second, it says trend is bearish. Okay, so that means right now at this moment, the Trade Scanner Pro is looking for shorts on this 30-second time frame. So the easiest thing to do is wait for, oh, I just turned it off, is to wait, you got to turn these on, is to wait for the trend to line up with the bigger picture. What about my 1 minute? Is my 1 minute bullish or bearish? It's bearish also. And the reason why these things are bearish was because of this movement back here, right? So the Trade Scanner Pro can't see, like it's basically, it's similar in a sense to a moving average, right? Where it's still sort of factoring in the older data, but the new data is showing something else, a higher low, right? Higher low. So there's a conflict. So if there's a conflict like that, it's best, let's just say the easiest thing to do is wait. You could change to the counter trend mode, but it's just easier to wait for these trends on these smaller time frames to switch back to bullish. It doesn't take long with the 30-second chart. Like, it'll switch back pretty quickly, relatively quickly. You are the only YouTuber. Hey, Peter, I've literally been waiting till Sunday every week for your Bitcoin analysis to help formulate my trades. Oh, I appreciate that, Peter. It's very nice of you to say. You're the only you're the only person to say that. No, I'm calling. Hussein says that too. The people that come and watch me, they recognize my value, Peter. That's a nice thing to say. Here, I'll show that for everyone else to see. It's a nice thing to say. Makes me feel good on a Monday, because I tell you, Peter, I generally get no, I get no, I get very little traction. No one really cares for my content. Yet I watch many unqualified people produce a lot of valueless content. It may be entertaining, but it certainly doesn't put you on the right side when it comes to making money. Yet they get all the views. They get all the their effort is worthwhile. It's worth their time. Me, it's not. So I'm definitely doing something wrong, and I am in the wrong space. So, my numbers, it's not, people say, oh, just be patient. My numbers are going the wrong way. And especially like, I've been doing my Monday stream for years. Those numbers are going definitely the wrong way. And I know one stream a week is not enough. And I've been doing these multi-day streams now for a couple of months, and my numbers are shrinking. So, and now I know I realize an important component here that I'm not doing is uploads. I have to do uploads. YouTube does not value live streams. YouTube values uploads. That's just a fact. And, and I'm not doing uploads. So I have to do them. Otherwise, I'm just wasting my time. So they just right. Well, that's the nature of it, because you know why? That's what appeals to the retail trader, and that's it, right? And I'm not going to be able to change the mindset of the retail trader. It doesn't matter how fancy talk. The only way I'm going to attract the retail trader is by saying dumb things, like, hey, buy the Mag 7 because it's magnificent. I mean, just utter nonsense. But that's look, that's the herd mentality, that's groupthink. And you would think by being a little more just trying to deliver real value, like real actionable value, people would appreciate that. But people don't want that. People want dreams. That's all they want. So it doesn't matter if someone makes money or not in this space. What matters is you make them feel good. That's it. That's the strategy. And that's what everyone does, except for me. So now Twitter is probably a better space for me, because there are a lot of smart people on Twitter. There are smarter people that make some interesting observations that are worth paying attention to, I find. So Twitter is probably a better place for me, but I don't like Twitter. I just don't like it. I don't like having to tweet 10,000 times a day. Like, I'm not like a phone person. I'm like old school. Back in my day, there was no Twitter. Today you have to tweet like 3 times a day to stay relevant. It's like, all right, I get it. I'll have to try doing that. And like, oh, you could schedule tweets. Well, I still got to make content. I got to schedule. Like, I can't do all of these platforms. You know what I mean? I like YouTube because I just like YouTube better, but I get nowhere with it because I'm not doing uploads. Anyway, that's my problem. But I have to do something because this is not a good use of my time. So anyway, I'll figure it out. So look, we're having some conflict here, right? Has this changed? Okay, look, this changed back to bullish. You see, when I first started, this was bearish. Remember? This is bullish now. Okay. So it's aligning now, right? This should also be bullish, right? They're bullish now. Okay. So that wasn't long. That wasn't a long wait. Now I'm just waiting for a long signal. Remember, the Trade Scanner Pro is a confirmation tool, and it looks for pullbacks. So I kind of feel silly teaching people the Trade Scanner Pro now, because I learned it should automatically be intuitive. I guess I should have known this, but I'm not a software person. I'm not a software developer. I just had a tool that was built that I thought would be helpful. But as I should know, it doesn't matter what I think. Right? What matters is what people want. And, they want something that's, I mean, in terms of tools, people want something that's just going to give them a clear visual cue and be intuitive. Meaning, you don't have to do anything. All you have to do is see an arrow and press a button. And even that's probably getting too cumbersome. That's too much, because really, if you really do have like a working system, I think copy trade is the best way to go for something like that. Like an actual a system that's doing everything, that's taking a trade based on a certain type of probability, based on a certain thing, whatever, right? Where the user has to no input from the user. That would just be a copy trade situation. And uh, with these, usually with these people that are sharing strategies and like, oh, I'm going to show you my magic strategy. Right off the bat, if they're sharing it, it doesn't work, because if your strategy is 100% whatever, if it works, there's no incentive to share it. There's absolutely no incentive, especially because of the fact that all strategies do become obsolete and they regularly need to be updated. There is no economic incentive to actually share what's called an edge, right? An advantage. There's no economic incentive to do so, especially because all you're doing is contributing to the making it obsolete faster, because when everyone starts doing the same thing, whatever alpha was available vanishes. That's why the system stops making money, because everyone, there's you could think of it as like there's a pocket of money somewhere in the market, some inefficiency because whatever, people are doing something for some strange reason, and there's a pocket of money sitting there. Once that pocket of money is learned about, it evaporates because developers get in there, everyone gets in there, and they all want a piece of it, and they're all taking the same side, and that money, that pocket of money, is arbed out of the system. That's called efficiency, right? When that money is gone, that's efficiency. When that money is sitting there, that's inefficiency. And at one time, the market was full of inefficiency. When I started out in this game, the market was just pure inefficient. That's why where I worked, guys were able to make so much money, so easily because we had an advantage in that particular inefficient environment. So, and what pit traders also, when you had the trade pits, open outcry, which no longer is a thing. But the reason why those guys made so much money, it wasn't because they were smarter than everyone else. It's because they were in the middle of a very, very inefficient environment, which, at one time, that was the way to conduct business. But once technology started to show up, open outcry there was a pocket of time where it was just inefficient, and you could take advantage of that because people that were calling in on the phones were behind the actual price in the pit. So being in the pit, just being the proximity alone was an advantage, right? So you were there, you had better prices than the people calling in. And the people calling in weren't just retail traders. People calling in were hedge fund managers and big money too. So there was a lot of money floating around in there, and that's why you hear these stories of these guys who had made lots of money in there. That's the reason. And the reason why they don't make money anymore, and you don't see, you know, pit traders have become a very, very, very small minority. It's because there's no more inefficiency in there. No one can make money, so they all quit. That's why floors. That's why there's no such thing as an open outcry floor anymore. So, and the efficiency was ushered in by technology. Computers made markets way more efficient. Great for large players who get better prices on their gigantic size that they're going to be throwing around. But large players don't speculate. They don't do what we do, you know. But I was thinking about this too from more of like a economic point of view. The whole idea behind what we do, speculating, really, the idea originated from the futures markets, and a speculator in the futures markets got paid, got compensated for essentially making a market or taking on risk, and they would get compensated. So the idea was anyone can go into the futures pit at one time and make a market, meaning you have bids out there, you have offers out there. And who are you making a market for? Producers. So if you're a farmer, for example, or maybe you're a gold miner or a silver miner, or a producer of some kind of one of those kind of things, you use the futures markets to hedge your exposure, to hedge to control your costs. There are reasons why you would use the futures market, but someone had to let you in and out of those markets. It's 10 o'clock. We got a signal. Someone had to let you in and out. That would be the speculator. So if you were like, again, you were a farmer and you wanted to sell corn futures to lock in your price or whatever, because you're going to harvest whatever, right? You're running your corn business. Someone's got to, and you're looking to buy corn futures, or maybe, you're looking to sell. Someone's got to buy those corn futures from you. Who's going to buy that, right? Another farmer? No, because another farmer is doing the same thing. So a speculator, a regular person, right, who just comes into the futures market with their money, I'll buy those corn futures from you. Hopefully I could sell it and make the spread. That was the actual function. There was an economic function for it. And so speculators allowed that business to be conducted in a smoother way. And producers like farmers and whatever, they could manage their business in an easier way because they had a nice liquid market to manage their inventory with, right? That was the actual purpose. We don't have that today. I don't think it doesn't work like that anymore. We can't make markets anymore, right? You have market makers that are designated. And while in theory anyone could be a market maker, it's not a business that the retail trader could really access. And I spoke to a few real market makers when I was in Spain who make markets in Bitcoin and stuff like that. And I'm like, wow, I'd like to learn more about this. And they're telling me, it's a very high barrier to entry. You need developers, you need algos. It takes at least, one guy told me it takes 6 to 18, was it 6 to 18 months to get a system up and running, and a profitable market making system up and running. 6 to 18 months. And then someone else told me more recently, I'm waiting, I'm not taking the signal because I'm looking for the reentry. I'm going to buy 2 contracts. Um, let's see how this candle closes. So someone else told me when I went to this networking event over the previous week that Citadel is getting into the Bitcoin market making game because they're not in it yet. And I'm like, okay, I'm taking this. I'm taking this on this green candle right here. I probably should have waited for the blue line, but all right, I guess not. It's after 10 o'clock, so let's see how this goes. Um, so if Citadel is getting into the market maker game, there's really no room for anyone else. Like if they're getting into making markets in Bitcoin, oh, I'm gonna have to bang this out, man. This thing stinks. All right, but I have to respect the stop. If it touches that stop, I have to bang it out. I should have waited one more candle, but it's always a story. I should have. I should have waited for this. That's what I should have. Oh, maybe we'll get it now. Look, nice pin bar. Maybe we'll get it now. All right, I'll give it a chance. Now, in theory, the reentry. Remember, the whole reentry idea is wait for the signal, wait for this type of price action, right? Let it fool around inside the risk gap, and then let it break above the blue line again a second time. That's the reentry filter. By waiting for that, you help filter out some of these stop losses. See, like this. So this would be a nice reentry because you have a pin bar. See, now we're going back to the blue line. See, I should have waited for this. All right, but I'm in. I have 2 contracts. So I was going to say, in theory, if we go above the blue line, that should be another ad, right? I could justify a third entry, but I'm not going to do that. This market's been bad enough. This is the 30-second chart, so let's see how that goes. Now, so what was I saying? Yeah. So if Citadel is going to enter the market making game, then there's no point in even trying because they're going to eat everyone's lunch. If you don't know who Citadel is, Google it. As this YouTuber I love to watch, Tommy Anytime. He referred, Ken Griffin is the CEO of Citadel. He's a legendary guy, and Tommy Anytime referred to him as uh, Ken Too Much Cocaine Griffin. I just thought that was funny. Just funny. If you haven't seen Tommy Anytime, you got to watch him. He's really funny. He's this Australian guy, and he calls out fake gurus. I've mentioned him before on my channel. He's just funny. He's on YouTube. Google Tommy Anytime. His jokes are hilarious. So, and he has a small following for the type of content he produces. Some very good content, and no one watches him either. He's funny. He should be a guy with 1 million subscribers, and he has like a small channel. So, I don't know. But if there's someone I would promote, I'd promote him. Tommy Anytime. And he really calls out. He doesn't just call out the guru. It's easy to call out a fake guru. It's, oh, this guy is fake. It's easy to say that. This guy gets into all the details on how they're fake and how they fake their P&L and how they fake their statements. And he actually shows you how it's done. It's very interesting. So it's a great training program if you want to become a fake guru because they teach you all the techniques, how to fake everything. Very interesting. So anyway, all right, so let's see how this goes. If I had taken this, this would have been the re-entry right here, right? That should have been the official entry, and I still would be taking pain on it. So if you missed when I talked about that a week ago, I made a filter adjustment, right, for the Trade Scanner Pro, and the filter is very simple. Let the signal appear, and then let it pull back inside the risk gap, which is, the risk gap is just simply this, okay, the entry to the stop. Let it pull back inside there, and then let it go back above the blue line. That's it. It's very simple. So you filter out a lot of noise trades, right? Like this could very easily be a stop out. Maybe it's going to stop out. But if I had waited for this reentry, it still would have been a stop out, possibly. But as we saw on Friday, I had a situation where I was able to avoid the stops. I was able to avoid two stop outs, I think, and then I took one trade, or I had a losing trade, but I made it back very easily, and I basically broke even for the day. But that trade, that day would have been a negative day if I had not used this filter. So zero or break even is better than negative. All right, so this would be another re-entry opportunity. Second one, see that? So again, if I had missed the original entry and I had missed the second one, this would be my third opportunity to get into this trade. This is especially important for larger time frames. If you trade like 5 minute or whatever, this is exactly how you would take this. You see this? Third entry right here. This would be another entry. And this happens on larger time frames all the time, where you missed the trade. Maybe the trade occurred overnight and you weren't watching or whatever, but there's still other opportunities to get into that trade. This is what they look like. So let's see if this thing can get itself going here. Now, while we're waiting for this thing to maybe make me look good today, because it's been making me look bad for weeks now. Let's just take a quick look at Bitcoin. So I don't know if you know this, but MBT, I think it is MBT, is the Bitcoin futures on the CME. See that? So that's the CME's version. MBT is the CME version of Bitcoin futures. Now, typically, this is the Bitcoin futures chart. I can trade this with this prop firm. I can trade this because it's on the CME. This is the 1 minute chart. So, I mean, Bitcoin is maybe a better choice here. The problem with Bitcoin, ooh, look at that candle. I like that candle. The problem with Bitcoin, of course, are the spreads. If you look at the spreads here, look, 107,805, 8 by 820. It's a 20-point spread. That's kind of a lot. All right, but that's what you're dealing with the CME. That's, you compare that to like perp futures on like MEXC, and you're paying a 1-point spread on there. Right? Now, of course, they have like their own cost structure. It's not exactly the same. But I just find if you're going to trade Bitcoin futures, you're probably better off doing it on something like MEXC. Now, MEXC, of course, is a centralized exchange, and they have their own problems. There's no perfect way to do this. The CME is the CME. They're going to be a little more transparent and stable about things. So, but I had no problem with MEXC. The reason why I don't do that here is because no one has any money to do it. So that's why I don't trade Bitcoin futures. But MEXC allows you, if you're US or whatever, there's no KYC, and I don't think you need a VPN, or maybe you do. I forget. But they recently changed some things around so that US traders basically can trade. It's limited, like there's certain things you can't do, but you can still trade. You can still do what you have to do. So I'm like, oh, that's cool. It's nice of MEXC. What do you think about weekly candle on Bitcoin? The weekly, let's take a look. Well, so here's the weekly candle. I'll be honest with you, like the candle itself, look, you have a pin bar from the week before. The candle itself is good. It's strong, but bigger picture, these levels are horrendous. Hussein, I would not go near this thing. And here's why. I mean, I don't know if you could see this, what I'm talking about. But look at this, right? This is extreme high risk zone. This is good for day trades. This is good for swing trades. This is not good for anything else. Like this is, day trades you could trade anytime. It doesn't matter, right? But the risk here, like people that are buying Bitcoin now, you have to be a moron. All you're doing is letting the Winklevoss brothers out and letting them get richer. That's all you're doing here. You're letting those guys out of their billions of dollars because they would be wise to unload here, or at least they while retail is mindlessly consuming, you unload to them. That's what you do here. You don't invest here. Although Michael Saylor will tell you to invest here, and it's just getting started, people. It's just getting started, and they rip up $1. Oh, I have a $1 bill. I want to see them rip up $100 bill. Why don't they take that money? They oh, this is garbage. Let me rip this up. Why don't you give that money to someone that could really use it? All right. Anyway, I'm not going to get all political now. So, uh, nice. Look, we reached the profit objective. I got to switch this back. I got to get out. All right. At least the NASDAQ made me look good today. Usually makes me look bad. All right. So I'm going to sell one contract. Sell one here. Okay. Goodbye. Sold one. All right. Now I'm going to try to let this ride. Right. So this is the whole point of having the trailing stop. As you can see, the trailing stop has advanced on this chart, right? And my risk gap is closed. See this? This is my risk gap. I almost got stopped out of this stupid trade. The trailing stop is at break even, which means this is a no risk trade. The trailing stop has now just advanced above my entry price area. See that? So right now on this trade, if this were to turn around and go to the trailing stop, I'm giving back 28 points, 30 points. Okay, but I locked in profit on one. Man, I should have bought three, right? This would have been huge. Of course, I always say that after the fact. Oh, I should have bought 10. I should have bought 10 mini lots. I'd be up thousands of dollars right now. But, that same idea will ruin you when, when things get hard. So look, for whatever reason, NASDAQ's got this little thing going on. So we were right on working on the long side, right? Very simple, right? There wasn't much work done here, as you can see. I spent very little time on analysis. Now, I know, like, I sit here and I try to make it say it's simple, but clearly I'm wrong with all that because it should be just intuitive and automatic. But what am I going to do? I have to figure out. My plan was, well, I'll just educate people with my streams. But if no one's watching my streams, then people don't want a tool where they need instruction. They don't want an instruction manual. They just let me see it. Okay, I should know what to do. That's the reality of today. No one wants to learn. Retail does not want to learn. They're tired of learning. So they just want it to work. It's that simple. So if you can't produce something that simple, then you're going to have a hard sell. And that's what I'm going through here. No one's really interested in my Trade Scanner Pro. Some of you are, but most people aren't. Like it's not a good business model. Let's just put it that way. It's not a sustainable business model because people don't stick with it for long. They cancel it pretty quickly. And I know why they cancel it. It's because they don't know how to use it. As you can see here, it's helping me stay in this trade. Like it's a valuable tool. I know it's a valuable tool, but a beginner is not going to be able to appreciate it. And I even tried to price it so that it's realistic for people, but clearly it's not. It's not a marketable tool. So I'm not even pushing it. Because I know people try it out, they cancel. It's like it's not even worth the energy pushing it. So you want to learn? Hey, Voin, at least someone wants to learn. That's cool. There's 10 million fake gurus. They'll teach you. So anyway, but as you can see, there was not much work done here. All I had to do was get a sense of the market structure, which I showed you earlier, right? And then I had some levels in mind. And look, we're not even at the resistance level, are we? Oh, but we blew through one of them. See this blue line here? I drew this blue line earlier on the hourly chart. And but like I said, when I was drawing it, if the trend is generally bullish, we should anticipate a break of resistance, right? Okay, good. We got it. We got the break of resistance. Also, let's take a quick look at the opening range. Oh, look at this. There's even a trade on the 30-minute. Look at this. This is a 30-minute chart. There was a long trade present there. Okay. Doesn't mean anything, but it's just cool to see. So let's highlight our opening range, right? So the first candle defines the opening range, 9:30 to 10 o'clock. So look, we're above that, aren't we? That's a very bullish sign. The fact that the second candle, the 10 o'clock candle, is above the opening range. That's another bullish argument. And look at that, we're just going vertical right now to the 30-minute price objective. That's nice. How nice. So back to my 1 minute. Is this my 1 minute? Yeah. What happened to the trade? Oh, I guess the price objective was reached. There was a trade there. Where is it now? All right, doesn't matter. I still have my 30-second chart here running with that trade, right? Got my trailing stop. Look at how far my trailing stop has advanced. Okay, look at this. So my trailing stop is now advanced that much. So the trailing stop is just keeping me in the trade. Now, I would really not like to give back any of this money. So if I see a hard time, I'm probably just going to get out. All right, but I'm seeing green candles, so I'll try to give this a chance. But in theory, the idea is to let the trailing stop guide your decisions. So you don't get out. The idea is you stay in until this trailing stop is touched. Okay? And while that's not going to get you out at the top, right? It's impossible. If there's a big move, this is going to keep you in longer. That's the idea. So where you may have only captured, let's say, 20 points, and the move is 100 points, this will keep you in for like 70 or 80 points, right? That's better than 20 points. So that's the idea. And trailing stops obviously are only going to be most effective in markets that trend. The NASDAQ is known for the personality of the NASDAQ is it's a more of a market that sustains trends when it does, but when it doesn't, it sucks. But when it does, this thing can run 200 points, 300 points, without pulling back. It can do it. It's just rare, right? And there's no way to know when you're going to get one of those because again, that some news item could come out and spark a trend. So you can't forecast such a move. All you can do is position yourself for the possibility of a long or a short and then let the market do its job, right? That's all you can do. All right. So anyway, so if you're new to the Trade Scanner Pro, I would suggest, watching my streams. That's the whole point of these streams, is to give you sort of a guide to how to use this thing because it's not intuitive. And I should have thought of that. But when I developed this thing a year ago, I was less experienced as far as software development. I'm not a software developer. So I was just happy to get an idea into code, an idea that had some promise. That's it. That's what it was. It was that was all. That was it. So we need to develop this further, but Stain has been busy. So I don't know, like that's kind of like on the hold right now. So I just have to work with what I have. So it's been, but the tool works clearly. When it works, it works. But again, it's not the tool. The tool is just simplifying my decision-making process. I was still aligned with the market. And I showed you how to do that. That's very easy to do. The market shows you structure. It's going to either be strong or it's going to be weak or it's going to be something in between. If it's something in between, then usually it's a good idea for a beginner to just walk away. Right? And at the very beginning of the stream, what was I saying? I said, remember the trend on these time frames was both bearish. Remember that? And I said, well, all right, I'm not going to switch to counter trend mode. I'm just going to wait because these trends change pretty quick. And if we realign with the bigger picture, that's all I'm interested in. And we realigned. Great. And now look, ever since this move over here, we had this price spike over here, right? That was the entry, that price spike. Since then, it almost got stopped out. But since then, look at this. It's been beautiful, right? And on top of that, oh, you can't see it. Hold on. There. So, we had this entry here. But remember, that's not the entry that I took, right? Because I'm using the filter idea. And what happened? The filter is you don't take the initial signal. You wait for it to pull back inside the gap, inside the risk gap, and wait for a secondary entry or a retest of the blue line, right? Or maybe some type of bullish reversal inside of here. This pin bar would have been ideal. I got in a little bit before that pin bar, but that pin bar would have been ideal to get into as a long, and I would have been in at a better price, but that doesn't matter. Even if I missed that, there was another reentry of the blue line right here, another retouch of it. If you missed that, there was another one right here. So there were 3 entry opportunities on this 30-second time frame. This is a valuable lesson because this is what you will face on larger time frames, on 5-minute charts and above, whatever, 2-minute charts. You may miss your initial entry, and that's okay because you get these secondary and these third entry opportunities. You just have to recognize what they look like. It's that simple. It goes back above the blue line. It tries to touch the stop. It fails to touch the stop, and it goes back above the blue line. It doesn't guarantee that the trade is going to work, but what it does is it helps to filter out stop outs. So if the trade gives you an entry and goes straight to the stop, you avoid. Okay, I think I'm going to take money off the table. This thing is run nicely, and I'm going to, look at my trailing stop. It's at my profit objective. Look at that. Look at that. How much is this trade worth? 56 points. I think I'm going to take it. Let's see. I'm going to get a little more sensitive with this now. I should wait for the trailing stop, but a 56-point move in the NASDAQ is pretty decent. That's like if I capture 60 points, for example, that's $120 on one contract. Remember, I locked one in at the profit objective. So this is going to be over a $200 trade, right, altogether. Because if I'm capturing like 60 points here, that's 120 plus whatever I made on the first contract. And the first contract was how much? Let's see, I bought it over here. So just about 40 points, right, which is another $80. So it's about $200. All right, I'm taking it. Goodbye. I'm out. I mean, I should wait for the trailing stop, but you know what? I don't want to give back any money. This is a nice move. Don't let greed enter the picture, especially with this account. I got beat up in this account. So how much money is that? Let's see. $183. Man, I couldn't even clear $200. Come on, man. Come on, man. And when I lose, I blow through $200 very easily. But, whatever. I only had 2 contracts. Good thing I took 2. I was only going to take 1. So, all right, $183. Not bad. First trade, and I'm done. I don't have to do anything else. How long was that trade? Let's see. I bought it over here, and I sold it here. 40 minutes. So $183 in 40 minutes. Should I complain about that? Now look, it may touch that trailing stop. I got out a little early because I wasn't happy with these red candles, but I got out because I simply wanted to take the profit. We were beyond the profit objective, way beyond it. Okay, and it's a 30-second chart. Like how far is that? How far is it going to go before it pulls back? And I don't want to take any chances. Book the profit. And when you're dealing with a prop firm, it's usually a good idea to just take the money. Don't look for big trades. If this thing runs further without me, whatever, okay, whatever. I'm happy with it. That's that. One trade. If they were all like this would be great. But the point is, the Trade Scanner Pro gave me a confirmation. Like we can review that trade real quick, just recap the trade while it's still open. I monitor 2 time frames, 30-second and 1 minute. right? Because something that doesn't show up in a 30-second, it may show up on the 1 minute. This move right here, this initial move, that started the move. That was a 10 o'clock candle, by the way. So there must have been some news possibly or something, right? 10 o'clock candle. It consolidated a bit. This was the opportunity to enter 3 times inside of that consolidation. There were 3 times to enter. Then we had the move to the profit objective. We blew through this blue line here, which was a resistance that I drew in earlier. That was, I think it was today, the overnight. Was that the overnight high or was yesterday's high? Whatever that was. Blew through that. Okay. Went to the objective. Great. Took one off there and then went a little higher. Took the second one off. Very simple. So the key learning point here really is just the reentry filter. This reentry filter gave, let's just point out the 3 times that you could have bought this. Again, I emphasize this because you're going to be facing this a lot with larger time frames. I don't recommend 30-second and 1 minute time frames. I only trade them here because I get signals for the stream. Okay, and I was up $1,000 at one point, and I gave the money back, but now I'm up a little bit, right? The point is, these time frames are hard because they change a lot, and there's a lot of noise. But this was one entry right here. I was in a little early, right? I got in on this green candle right here. That was a mistake, but all right. And if I had waited for the pin bar, I would have gotten in near the same price anyway. It would have been almost the same price as that green candle that I entered. I just had to sit through this noise, right? I had to sit through this almost getting stopped out. I'd rather not sit through that, right? Because and if I was not using the Trade Scanner Pro and I saw that candle at the bottom there, like I may have banged it out just as a reaction, which would have been suboptimal. So we went back up to the blue line, right? So our second possible entry was here, the blue line, right? That's the reentry. And then we went back below again, and look, we crossed it again. There were 3 entry opportunities after the signal. Okay, see that? That's the signal. You don't take the initial signal in this environment. Wait for a re-entry opportunity. There were 3 of them. So you don't have to fear missing out. There's no missing out. You had 3 chances. This trade's still open? This trade's still open, almost stopped out. Look at that. And after that, after the third one, I mean, you had, first of all, you had a pin bar. Second of all, you had a higher low. So that right there should bolster confidence, at least. Okay, those are signs of strength. That's what I want to see in a bullish environment, because we knew previously we were in a bullish environment. Okay, beautiful. And then the trade just, the market worked for you from there, right? It just does its thing, and that's that. Let's see when this trade gets stopped out. Look, the trailing stop is still in effect. So theoretically, you should still be in this trade. And if there's another leg higher, this will keep you in it. Right? I'm not going to take any trades now. That would be unwise. But I exited where? Like over here? I exited like right here. Right up in this area. That's where I exited, right there. So far my exit was a better choice so far. And if it stops out at this price, then my manual exit was a better choice. But look, that's random. Okay? I'm not going to sit here and pretend that I know better or anything else. I just got out because I felt like getting out. It was that simple, because I wanted to take profit. How many times have you guys seen me get out early and I leave a ton of money on the table because the market just continues higher and I got out for no good reason, right? That's random. And I know that. So that's why it's like, look, I just want to take profit. I'm going to take profit. I don't care if the market goes higher. If the market goes higher, all right, whatever. It's random. So I don't take it personally. It's random. We're playing a random game. Oh, now I feel bad. I should have stayed in. Now I feel like a moron. No, I'm joking. It's random. It's random. I may have banged it out here, right? But if I had trusted the trailing stop, or if that was my plan, I'm only going to get out when the trailing stop is touched. It gives the trailing stop gives you the opportunity to stay in something like this. Okay, look, and we right up to the resistance line. See that? And we're rejecting it. So that's how you use this thing. The idea of the Trade Scanner Pro is to simplify your decision making. So, you know, and the trailing stop opens up the possibility. That's all. It opens up the possibility that maybe you continue to ride this. Now, this may give the whole thing back and go straight to the trailing stop. That's why you have to accept the random nature. Markets are highly random, especially on these time frames. They're highly random. If you don't accept that, you're just wasting your time. People think, oh, I want something with a 99% win rate. You're just wasting your time. All right, you just keep chasing. Oh, look at that. Man, what is going on here? Must be some news. Maybe someone's tweeting. Maybe our favorite world leader is tweeting something. Something's going on. We're getting these spikes. Look right into that resistance. So another nice thing about this is I'm not getting sucked into taking shorts, right? The Trade Scanner Pro says long. A long trade is in progress. There should be no shorts. People may have shorted this. Oh, double top, blah, blah, blah. You're getting squeezed. There's no reason to short this. It's strong. You're looking to buy pullbacks. And at this point, with a trade that's matured like this, there's nothing to do here. Right? I exited a little earlier. I always leave money on the table, whatever. It's not my table. Okay. It's the market's table. And that's it. I just wanted to see if it would touch that trailing stop. It almost touched it. The trailing stop is sitting here just above my profit objective. And it's that simple, right? So if you're in this trade, you have two choices. Get out now, take the money at the high, and avoid any pulling back, or you take the chance that it pulls back to the trailing stop in exchange for the possibility of it running higher. So in a slow grind market where it just keeps going and going and going, that's where you're going to capture big moves. But here's the thing: big moves like that are very rare. So it's better. You're better off taking profits than trying to look for big moves, because big moves can be very costly. Trying to wait for those, you're going to give back a lot of money thinking you're in big moves, right? If you happen to catch a big move one time, it's just like a lottery ticket. You have to look at it that way. I don't look for big moves. I want consistency. I take a trade, it's green. I don't care how green it is, it's green. That's all I care about. So that's what, for me, that's what bolsters confidence. Okay, I have a high win rate system or whatever, not a high win rate, but just a positive probability, meaning I'm better than 50%. If I'm better than 50%, that means what I'm taking is less random. I'm not going to say non-random, less random. I'm happy about that. That's it. So even if my win rate is 61%, I'm happy with that, because I'm doing slightly better than random. That is a big factor of all this. Some people, theoretically, you can make money even if you have a sub 50%, like if you're a 40% win rate system, you can actually make money. It's not the win rate, it's the reward risk. That's just the way this game works. Like if you're only right 40% of the time, but when you're right, you capture huge moves, you're going to win. Meaning, you lose $100, but you make 500, you're going to be ahead, even though you're only right 40% of the time. That's the key to this game. I just my personality type. I like to be right more, because I like smaller moves, and I like to be right more often. That's just my personality type. It just gives me more confidence. I don't like sitting around waiting all day, take a trade, and then you're wrong. And now you got to wait for tomorrow for the next setup. Like I just don't like that. I don't like waiting around 3 hours just to lose money. I like action. I am impatient. I'll admit I'm impatient. I like this, and there's plenty of opportunities in the market regularly. They're just smaller. So I don't mind smaller. I just want to take a little money and I'm done. So anyway, so that's why personality type is important in this game. It is important, and you have to take inventory of that. All right, so this market doesn't want to pull back to my trailing stop. It just doesn't want to, not yet. And if the market continues higher, this trailing stop is just going to start. It's just going to continue to follow it. But we are getting a little sticky around this resistance. See what I mean? So it does pay to put your levels in advance. I put, as you know, the first thing that I do is the very first thing that I do when I start the stream is I put these levels on the chart. The first thing that I do. It's very simple. And look, we're sticking. Okay, good. That's good to know. So that level is a good estimation of a good possibility, one place to anticipate where you might want to take profit in advance. Again, I got out over here a little early, whatever, but this is a good reference point. It's also a good reference point to not take longs, right? So even if I get long setups over here and all this and all that, this is a significant resistance area and the market is reacting to it right now. We may find a higher low and blow through it, so I wouldn't short this. It's a high risk short. It's a very aggressive short, but at least I should know not to go long here. Even as a day trader, I shouldn't be going long here. Not here. Wait for a pullback, right? At least a little away from this resistance. Like an ideal pullback would be maybe somewhere in here. That would be ideal for this time frame. That would be more ideal. That would be higher probability, right? So, for example, if we were not in a trade and the Trade Scanner Pro is showing longs up here, we should know that that's a higher risk long because I'm buying this thing right at the resistance, right? So that's how you could gauge the probability. When I bought this thing, right, it was here. We were nowhere near that resistance. We were near a resistance. We were near this one, right? We were near, but we weren't sitting on it. We're sitting on it up here. So anyway, all right. So I summarized everything. I'll leave you with that. Nice session today. So at I will be streaming again at 3 p.m. Eastern time. We will do the analysis stream. We'll go over Bitcoin. We'll go over some other markets. And I'll also look to incorporate the Trade Scanner Pro and see if there are any re-entry opportunities across whatever markets. We could take a look at whatever and see if there are any re-entry opportunities. This is also where the Trade Scanner bot can be helpful because the Trade Scanner bot can give you pop up the signal and you say, oh, okay, now I put it on my radar and now I watch for those re-entry signals. Because the Trade Scanner bot looks for signals on a 4-hour time frame. That's an ideal time frame to look for these type of re-entry signals. All right, anyway, if you have any questions, you know where to find me. Check me out at 3 o'clock. We'll do this again, and I'll see you there. All right, so again, thank you guys for taking the time to watch me today. I hope you learned something. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.